honestly, it's quite boring, but for the next few weeks, it might just be a little bit underwhelming. Again, we're looking at news headlines, we're looking at what's happening in the Middle East, we're looking at what Fed policy is doing here and there. And of course, that's going to cause a few percent moves and swings intra-week. But zoom out, look at a long-term cycle basis. Most of it is just noise. Most of it is just stuff that realistically is unpredictable and for the most part doesn't have a long-term influence on the trajectory of Bitcoin.
Which I think is positive. Like how weird it would be or how bad it would be if Bitcoin would move on news headlines. I think that it's a good thing that we don't have that. And I think there's also like we are a $1 trillion asset, like 1 to 2 trillion, somewhere in between, depending on where the price currently is. And we're not a security, and we are commodity. And so if you company announces some new patent that they have, or company has like new earnings in the earnings calls, like something like that, that can definitely move the market because it changes what the company is doing, or like it might actually impact the company for the better or for the worse. But Bitcoin doesn't really care like too much. And then I think this 51% is like interesting because it really shows by data that news headlines and things that come out bullish or bearish doesn't really affect the Bitcoin price too much. It might affect it, but it doesn't. It's sometimes positive, sometimes negative. And there's also I think the impact of individuals on top of Bitcoin is lower and lower. We had, I think, in 2021, where Elon Musk came into Bitcoin, and we had this massive upswing and then a massive downswing, where he first was positive and then negative on Bitcoin, and it was like, I don't know, a month or so where this all happened. And I think we're slowly moving away from that. We're slowly moving away from individuals having impact on Bitcoin, headlines having an impact on Bitcoin, small events having an impact on Bitcoin. I mean, we still see it, but we also 100% know that it, like, there was this Trump tweet coming out and it had like an impact on Bitcoin price. But I'm always questioning, does it really like is it really that, or is it just like there's something also else going on? Because you never really know if that headline just came out at the right time and that's why the market moved, or if that headline actually moved the market in any specific way. So I'm also a little bit curious also with that. And I think your data shows shows exactly that.
Yeah, 100%. And another way to look at it is now that Bitcoin is becoming more of this institutional asset, and it's just becoming more expensive. I think the bigger Bitcoin gets, obviously, the more it succeeds. But the more the actual fundamentals come into a positive play for Bitcoin. So historically, we looked at Bitcoin as this, shady internet, magic internet money that was just, cypherpunks just trying to accumulate and do some online transactions, whatever they wanted to do. Then there was a very large amount of Bitcoin held in a very small amount of hands. There wasn't a huge amount of dilution across many market participants. Whereas Bitcoin's getting more expensive, now it's not really viable for the everyday person to accumulate 10 or even 1 Bitcoin. It's just simply too expensive. So all of these previous adopters were holding a pretty large percentage of the circulating supply of Bitcoin within just a few hundred, a few thousand people. Whereas now we've had this kind of IPO moment and institutions are coming into effect. We're seeing a larger distribution of coins amongst more market participants. So the fact that we're seeing, a wider spread of coins means that these news events aren't necessarily dictated by a handful of individuals that had a negative reaction to them, an offload, and see a big dump in the market price. Now you need significantly more market participants to actually foresee that as a bearish thing happening and all sell in unison for that to really come into effect. So that's another positive influence that we're seeing by Bitcoin growing as an asset, is that we don't see a smaller amount of people having a larger influence and more power over the upcoming price action of Bitcoin.
Yes, I think that's also a very positive thing. But I think you have some more charts for us.
I do. So this is the global M2 versus Bitcoin year-on-year chart. Now, as I said, I think the previous bull market, many were expecting incredibly bullish, positive things, but Bitcoin is still very much tied to global risk-on sentiment and global liquidity, etc. Now, one of the most posted charts I saw on social media last cycle was the correlation between Bitcoin and global M2 with a 70-day off sale or 100-day off sale, whatever it may be. But really, the correlation of that long term wasn't really there for me. If you look at global M2, it's typically always up and to the right. Most central banks aren't the most sensible and frugal when it comes to the expansion or contraction of their global monetary policy systems. But if you look at it on a year-on-year basis, so look at the absolute rate of change, the acceleration or deceleration of new capital coming into markets, we can see this actually does have an almost one-to-one correlation with the Bitcoin price action. So when global M2 isn't just increasing, but it's increasing at an accelerated rate, this has coincided almost perfectly with big bullish markets for the Bitcoin price action. And the same is true because as this global M2 year on year is shrinking, we still might see global M2 increasing. It's just at a decreased rate. We're again looking at the rate of change on a year on year basis rather than just the raw values. And again, this really outlines the fact that we've struggled this cycle. At the absolute peak, it was only about 8% on a year-on-year basis, whereas in the previous two bull markets, it was over 15% and close to 20%. So really on a year-on-year basis in terms of just global liquidity, this cycle was considerably different than historically what we'd seen for Bitcoin bull markets. And this actually topped out again in June of 2025. So that period of chopping and consolidation, even though we set a new all-time high in US dollar terms, again, if you look at Bitcoin versus gold, we actually topped out in late 2024. And it's a similar story for equity indexes as well. And during that time, again, Bitcoin on a year-on-year basis was actually decreasing. So we look at the price action and it's stagnating, it's holding above $100,000. But on a relative change basis, we're actually really struggling. So I think this better outlines why Bitcoin maybe didn't have the bull market many expected. And alongside that, if we look at the high yield credit cycles for Bitcoin, which is the risk appetite for higher yielding, riskier corporate bonds, again, we never really had this big exponential rush from traditional investors into these more speculative assets. This cycle was kind of over before it really even started. And because of that, Bitcoin never really had this trickle down of capital from riskier assets in traditional markets into more speculative commodities, in assets like Bitcoin and cryptocurrencies that, again, we've traditionally seen. We're already seeing the high yield credit begin to turn over in terms of the risk appetite and the actual demand for these types of products. And this just coincides with Bitcoin not really having the most bullish periods of price action. So just another couple things to watch there. And like I said, if we are to see further downside for Bitcoin, the long-term holder realized price, so the realized price being the cost basis or the average accumulation price for all market participants, the long-term holders is just looking at those average accumulation prices for those who have been in Bitcoin for the longest amount of time, once they've crossed the threshold into becoming a long-term holder. And this is currently around $47,000. And alongside that, the cumulative value days destroyed, which is one of, if not the most accurate metrics we have for forecasting Bitcoin bear market support, this is also in the mid $40,000 region. So again, it's just one of these where we work in probabilities. If we look at the Puel multiple, which is based on the miner earnings, this wouldn't reach the accumulation zone until $50,000. But this is one of those where I know I'm kind of contradicting myself what I said before, but it doesn't necessarily mean that we are going to reach $50,000 or even lower. We didn't reach the sell zones on metrics like the Puel multiple or the MVRBZ this cycle. So it's not a guarantee that we'll reach the buy zones. For me, I'm looking at Bitcoin where it is in terms of the drawdown we've had, in terms of the bullish underlying fundamentals that we're seeing. And for me, I'm happy to accumulate down at these prices. Even if there's slightly more downside price action to come, then to me, that's just more Bitcoin I can get at an even greater discount.
Why is it that like that? I heard that many times that because we didn't had a massive all-time high of like 200K, that we have a lower crash kind of thing. It's like why is the one thing necessary for the other thing?
Good question. So if you look at markets being a purely supply and demand driven asset class, which they truly are, when we have these big parabolic blow-off moves, it results in a huge amount of capital inflows required to actually push Bitcoin into a parabolic move to the upside. So that's usually retail FOMO. That's when Bitcoin's making headlines, people are making Coinbase accounts and throwing money into the market. Now, of course, this results in these huge parabolic moves, but it also means that there's a huge disparity between the average accumulation price of long-term holders and new market participants. So if you looked at something like the ratio between the realized price, which is the average accumulation price for Bitcoin, and the short-term holder realized price, which again is just the new cost basis for new market participants. Once there's a huge discrepancy in that, there's almost like this mean reversion effect that we get. That Bitcoin likes to see long-term holders and short-term holders typically have a fairly similar amount, similar price, sorry, in terms of their cost basis, their average accumulation for Bitcoin. So because we didn't have this huge parabolic blow-off move where we didn't see huge amounts of Bitcoin being bought at considerably higher than the average price for all market participants, there wasn't as far to go on the downside because we didn't need to essentially have market equilibrium. So because there wasn't huge amount of capital inflows, doesn't necessarily mean that there's as much capital to outflow. And then because of that, there's just not as much Bitcoin to dump on new market participants. And again, because we're seeing these passive flows, because we didn't have this big blow off top, many people are just happy to, again, start scaling out of Bitcoin a little bit more slowly. Because if you were holding Bitcoin, again, from a few $100s, a couple $1,000s, and you saw Bitcoin climbing $10,000 every single day, you think that, right, now I have to take action. Now I really need to start offloading some coins. But if we're moving up very, very slowly, it's a much more sustainable approach to the market. If you almost think of when you drop like a pebble into water and you get these big waves to the upside, cause these big waves to the downside, but eventually they start leveling out and leveling out. And just this general volatility of Bitcoin is diminishing as the market cap increases. Because we've gone from an asset class of a few $100 billion to a few $1 trillion, the amount of capital that needs to flow into the market is significantly more to see these big upside moves. And the amount of capital that needs to flow out of the market or sold, again, is massively increased. And just touching on the point we made previously, the fact that the concentration of Bitcoin holdings is now considerably more spread. We don't need just a few individuals to start offloading tens of thousands of Bitcoin to have these huge downward moves, because the holdings are just now concentrated amongst considerably more market participants. And it's just usually not likely that we see a huge amount of people act in the same way at the same time when it comes to offloading coins and accumulating coins, because again, just human psychology. All on-chain data is really showing us is patterns in human psychology, and they're somewhat predictable. And the fact that, again, we didn't see a huge phase of euphoria typically means we don't see a huge phase of Bitcoin fearfulness and, capitulation in the market. Now, as much as we said how awful this Bitcoin bear market has been, we're down in terms of relative purchasing power, we're down 50%, the fear and greed index is looking awful, etc. If you just look at the raw percentage gains of this Bitcoin downwards move, in previous bear markets, we were looking at 75+% almost as a standard, 80 to 90% in most cases. This Bitcoin bear market so far has only had around a 50% retracement, which in the grand scheme of things is a relatively small retracement, yet we've already seen a vast majority of speculators capitulate. If I just quickly pull up, I think it's this chart here. Again, we're at bear market lows when we're looking at capital flows. This is the cycle capital flows chart, which looks at the comparison between new market participants and more experienced Bitcoin market participants and their average accumulation price. Again, it's a little bit complicated. If you look at the realized cap hodl waves on Bitcoin Magazine Pro, which is a free chart, then you'll understand this a little bit better. But when we see a massive disparity between the amount of actual market activity by those long-term holders, those with the biggest conviction, to these short-term speculators, it gives us some insight on where we may be in the market cycle. And right now, it looks like all of these people who came for a quick buck have already gone, because really there wasn't the quick buck to be made. So the previous bull market kind of shapes the following bear market. And if we look at, say, the 2017 cycle, we had this huge, big exponential blow off top. Within just a few weeks, we'd had a monumental 50% plus drawdown. Whereas in this market cycle, we were kind of topping, curling over for many, many months throughout the majority of 2025, really. And now we're starting this long, slow journey process to actually form out a Bitcoin bear market low.
Are you also seeing the business cycle? A lot of people talked about the business cycle in the last, like, I don't know, 6-7 months. I heard it more and more.
Yeah, so it's interesting. The global PMI is the big one, which I do have somewhere. If not, I'll just quickly load it up. So the manufacturing PMI gives us some good insight into the traditional business cycle of Bitcoin. Now, because Bitcoin has a pretty limited history and the data only comes out fairly infrequently, it doesn't give us the best indication on a kind of intra-day, intra-week basis of where the market may be going. But traditionally, the business cycle operates on a slightly longer term horizon than, say, the liquidity cycle. If we look at global M2, typically that operates on more of like a 4-year basis, but the business cycle can sometimes extend into almost an 8-year cycle. So it is a really interesting data point. And again, it does give some indication of where Bitcoin may be going. If people are generally more optimistic on the outlook of an economy, they're willing to invest in businesses, start manufacturing, start providing services, etc., then again, that just points towards more bullish conditions, especially if there's lower interest rates, there's more cheap debt available, etc. But for me, I think there's a little bit more to it than that. Because if we look at, say, during COVID 2020, when we had this huge dump, everyone was locked inside for a year. There wasn't a huge amount of business going on, but yet we saw Bitcoin skyrocket in a relatively short space of time for around $6,000 to, well, around $60,000, as the manufacturing PMI was still relatively low. Now, this tells me that Bitcoin isn't necessarily tied to an economic output of a country, especially now that we're seeing a bit of a shifting world order with AI coming in, and now we're more of a service-driven economy as we were compared to the previous decades. We were much more based on manufacturing and physical output of goods and products. So it's interesting, but I think Bitcoin is much more tied to liquidity and the flow of capital, as we're still in our relative infancy and we haven't become a staple of bigger portfolios yet. We're starting to get there. We're starting to see a few percent here and there in pension funds, but realistically, Bitcoin is still a more risk-on asset. I think we really just need to see more capital flowing into equities, into commodities, and then start flowing down until we have this decoupling moment. So it's something that I keep an eye on. I think we actually get some PMI data coming out this week as we film this. So it'll be interesting to see if that's up or down and if that has any influence on the Bitcoin price action. But I think there's more to it than just the traditional business cycle. And my thesis for that is if we look to the period of time where everyone was locked inside for a year, asset prices absolutely skyrocketed to the upside.
The first thing that every Bitcoiner does, and the most important activity that every Bitcoiner keeps on doing, is buying Bitcoin. And I personally use Relay to buy and sometimes also spend or sell my Bitcoin. And there are two main reasons why I do so. The first one is it's Bitcoin only. They do not do any shit coins. They do not do any cryptos, any stocks or anything else. This is a tool, an app that is fully focused only and solely on Bitcoin. The second one is self-custody. They give you the keys to your Bitcoin the moment you buy them. You never give them the control over your Bitcoin, and you don't have to trust them because you can verify that you and only you have the keys to your Bitcoin. There's no third-party risk. There's no freezing of your assets. There's no rug pulling. There's nothing of that. Download Relay, the app, on your phone, or go to relay.app on your browser and use code Robin to save fees and get cheaper Bitcoin. I want to tell you about something very special to me. It's called micro-seed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With micro-seed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today, and you can make with that unlimited amount of backups. Go now to microseed.io.